Hello and welcome to the program. Let us begin with the key signals from Wall Street overnight. The three major indices basically finished flat. The Nasdaq closed at 26,605, the S&P 500 at 7,753, and the Dow at 53,976. There was no clear directional driver in the session. However, futures were trading slightly higher in pre-market action. Nasdaq futures were up 0.08%, S&P futures up 0.07%, and Dow futures up 0.15%. That suggests a modestly positive tone for the open today. Stock-level moves were clearly differentiated. Nvidia fell 2.86%, the only major weight to drop more than 2%. The rising volatility in high-priced chip names is something to watch carefully. Crypto-related names also weakened. EBIT declined 1.55% as Bitcoin slipped 0.92% over the past 24 hours. Tesla edged up 0.18%, MSTR gained 0.55%, and ARKK added 0.07%. Growth-style names were broadly stable. Now let us look at the global macro temperature gauge. The 10-year Treasury yield came in at 4.69%, a slight pullback from the previous reading. It remains within the 4.6 to 4.7 range with no directional breakout. The modest decline in yields means liquidity conditions are not tightening, which does not pressure equities. But the move is too small to serve as a strong catalyst. The VIX is at 15.54, near the lower end of the normal 15 to 25 range. Market sentiment is stable, but there is no obvious greed signal. This is classic range-bound market behavior. Notably, the VIX edged up 0.52% on the day, suggesting some defensive positioning against a pullback in high-flying tech names. The dollar index is at 99.8, below the round number of 100. The weak dollar trend continues. Over the 7-day window, the dollar index fell 0.17%, which aligns with yuan appreciation and the sharp rally in gold. A weak dollar environment provides valuation support for emerging market assets, including shares. On oil, WTI is at $81.88, up 5.33% over 7 days. Brent is at 87.37. Elevated oil prices mainly reflect tight supply expectations. That is a direct positive for the oil and petrochemical sector, but it also pressures input costs for downstream manufacturers. Gold is at $4,453, up 8.04% over the week. Both the safe haven and de-dollarization narratives are strengthening simultaneously. Our overall assessment is that global markets are in a weak risk-on state. A weaker dollar and modestly lower treasury yield support risk assets. But the VIX has not pushed lower and gold keeps climbing, which tells us safe haven demand is still present. The invalidation trigger is important here. If the VIX crosses above 17 in a single session, or if the 10-year yield breaks above 4.75%, the risk-on logic is broken and investors should shift to a defensive posture. On the yuan, the onshore rate is at 6.7330 and the offshore rate at 6.7456. The onshore yuan has appreciated 0.09% over 7 days and 0.26% over 90 days. The currency is in a gentle appreciation channel. With the dollar index below 100, pressure on the yuan has further eased. That is a positive for foreign capital flows into shares. Historically, a combination of yuan appreciation and a weak dollar tends to coincide with net inflows through Stock Connect. But the current appreciation is limited. It is more about stabilizing existing foreign holdings and reducing outflow pressure rather than triggering a massive wave of inflows. On trade, tariffs, and tech restrictions between China and the US, there are no verified new developments to report. For the A-share open today, we lean toward a flat open. US futures are slightly higher, providing external support. But the Shanghai Composite fell 0.82% yesterday and the SSE 50 dropped 1.27%. That inertia pressure is still there. The bullish and bearish factors largely offset each other. If U.S. futures turn lower and the offshore yuan weakens past 6.76, the probability of a lower open rises significantly. For the index direction today, the Shanghai Composite is likely to trade in a range, with a reference band of 3,900 to 3,960. The core logic is this. Yesterday the Shanghai index broke below the short-term support near 3,940, but the Chi-Next board rose 0.34% against the trend. That tells us capital is rotating between sectors rather than exiting the market. The extreme divergence between the SSE 50 falling 1.27% and the Chi-Next rising 0.34% suggests the pressure on large caps is due to funds rotating from blue chips into growth names, not a systemic sell-off. If the Shanghai index breaks below 3,900 on rising volume, the range-bound view is invalidated and we shift to a down move. On the sector front, the first main line is oil, petrochemicals, and energy services. WTI is up 5.33% over 7 days at $81.88. Brent is at 87.37. Elevated oil prices are the most direct intraday catalyst for this sector. Combined with the weak dollar, upstream resource prices are more likely to rise than fall. The second line is AI optical modules and power equipment. Names like POET and COHR remain above their 200-day moving averages. HPS.A, a supplier of high-voltage transformers for data centers, is also above its 200-day average. This shows the AI computing infrastructure chain retains relative strength in a corrective market. On the risk side, the main dangers today are high flyers that have become overextended and weak names that have broken down. AEHR surged 56% over the past month and its catch-up progress has reached 100%. Combined with insider selling and institutional reduction signals, the risk of a high-level pullback is extremely high. Avoid it decisively. Stock 5802T has broken below its 200-day moving average and is down 16.31% over the month. We recommend a stop-loss exit. NOK has also broken below its 200-day average at 9.26 and is down 21.9% over the month. Major institutions are reducing positions. Avoid this one as well. AKTS has a short interest ratio of 0.7869, an extremely high level. In a corrective market, it faces enormous short pressure. Avoid it firmly. On northbound flows, the probability of net inflows today is slightly higher. The onshore yuan has appreciated 0.09% over 7 days and sits at a low level of 6.73. The dollar index is below 100 at 99.8. U.S. futures are up pre-market. All three external conditions point to a positive foreign stance. The observation signals are important. If northbound net outflows exceed 30 billion yuan after the open, or if the offshore yuan weakens past 6.76, the net inflow call is invalidated. One final point on our core judgment for today. A weak dollar plus yuan appreciation offsets external disturbances. Shares will likely see range-bound trading with divergence. Energy and optical modules are the two favored lines. Avoid high-level overextended names. Our probability assessment is 25% for a rally, 50% for range-bound, and 25% for a decline. Thank you for watching and we will see you next time.